Happy Monday, everybody. Welcome back. My name is Mike Fairborn, sitting in for Cameron May, who should be back next week. So, no need to fear there, but it is great to be back with you on this class, covered calls and short puts. I want to talk about more short puts today. I want to talk specifically about rolling. And if you're ever looking to roll the short put, got some pretty interesting examples of how we can do that from one month to the next, particularly when the amount of premium that's left in the current month is so small that it might even make sense just to roll it now, even at the same strike price. So I'll look forward to diving on into that with all of you today. Hey, and welcome to JV Texan from the great state of Texas, I take it. Good to have you here, as well as Jenny, Charles, Sharon. Hello to you, Sharon. We've got Mark and Rojo, Dom. Hello, Dom, Austin, and others. Great to have you on board. I'm joined in the chat by a good friend, colleague of mine, Barb Armstrong. Be sure to follow Barb on X. She always has got some great stuff to take a look at there. Barb Armstrong, CS. I am Mike Fairborn, CS, and Barb has already posted that in there for us. So any questions, comments you have, appreciate Barb being there to help out with that. She's very knowledgeable on this topic as well. So with that, let's just devote this time to disclosures very quickly so we can dive on into our content today. First off, options, they do carry a high level of risk. They are not suitable for all investors. Now, information here is for general information purposes only. Short options can be assigned at any time also. Vesting does involve risk, including the loss of principal. Paper money software application for education purposes only. A stop loss order will not guarantee an execution at or near the activation price. In fact, once activated, they do compete with other incoming market orders. So park that in your mind. We will be taking a look at some of those today as we dive into a number of different ways to look at this. With a stop order, you risk missing the market altogether. In a fast-moving market, it might be impossible to execute an order at the stop limit price or better. And did we have one of those on Friday? We did. We had a big market. I remember the NASDAQ. Well, I saw the NASDAQ was down 1,000 something. So, fast moving markets, that can be an issue. So you might not have the protection you sought with that stop limit order specifically. Lastly, as we're going to talk about it today, rolling strategies can entail transaction costs, including multiple contract fees, which may impact any potential return. And if we get into it, there are risks associated with investing in dividend paying stocks, including, but not limited to the risk that stocks may reduce paying dividends altogether. All right. Well, let's turn on over to it, folks. Again, I hope you had a fantastic weekend in this class. We do look at covered calls and short puts. Of course, that's what we do in this class. And looking to dive on into it. It was interesting to see, and I think it was probably very welcome by a number of the bulls out there. And I know you guys are out there. Maybe some bears as well. But that opening today was, I think, probably welcome from each of you, given the fact that we were down so much in the S&P 500. In fact, look at the range on the S&P over here. I'm just looking at R up top here. From high to low, we were at 173. So 173 points. And if I just look at really the height of the low, I'm just kind of giving us an approximation here. That was a good 2.5% and about 180, I guess. Yeah, 180 points roughly in that range. I'm just looking at highs to lows there. But anyways, it's saying that was 173. Fine. We'll stick with that. Maybe that's close to close, open to close. But that was interesting to see here. Now, one of the things I wanted to note is a quick note on this too, just for indications of maybe some strength going forward, possibly. We are at 7,400. We have been here before. It's not our first time to 74. There's our run up to 74. We broke above it, then we rested on it, then we fell all the way back down to it, and here we are again. Now, many of you guys are very well versed in the candlesticks, and does anybody know what this candlestick formation is? There's an old term for it that were used by, traders in the 40s, 30s, 40s, but then there's also like a more modern candlestick. Say modern kind of, but it's, the candlesticks are older than the 1940s for sure. Those are thousands of years older, at least 1,000 plus. But anybody recognize that pattern? It is a reversal type pattern. We'll see how the day ends. We still have a couple hours to go. But nonetheless, That is known as a potential reversal pattern. I'll give you guys just a second. If anybody knows, I like to quiz you, just keep you sharp on some of this stuff. Hello to you joining us here as well. We've got Will. Great to have Will on board as well as Pre-Med. Mighty Mouse is here as well. Looks like, let's see, Dom says, looks like the high was at $1 resistance Friday candle. That's right. Yeah. Okay. This candle is referred to as a Harami pattern, and that just means that the body of the small candle is inside the other candle. And what that simply means is uh, hem reversal, close. It's sort of it is a reversal pattern for sure, JB. There's no doubt about it. So you got that down. But it's referred to as a Harami. The guys in the 19 and gals in the 1940s would call this a inside day. And that is when the body of this candle opens and trades. It's got to open and close within the body of the prior day. If we just look at it on a 30-minute chart, it does tell us kind of what that is. What creates an inside day and why can it be a reversal? Well, if you take a look at it, it's kind of like one of these. We opened up, we gapped up, and we kind of, we're kind of flagging a little bit here intraday. It will be interesting to see if we can get some consolidation and some movement moving forward on this. But I thought that was welcome news. I just wanted to highlight that. Again, you'll see that over here on the NDX. And I just go through this for one simple reason, and that is what is our bias going to be in the market? I mean, a lot of the times we are looking at stocks in the S&P. That's not a good start to the five. There we go. 500, the S&P 500, a lot of companies in the S&P 500. And if you start to see them gapping up again, and if we start to just consolidate at least or go higher, that could be quite positive for what we discuss in this class, which are short puts, right? And covered calls. Today's short puts, because I thought it was actually even better because we can take advantage of this, of prices coming down, right? Shooting up that, the delta really, and we'll get to delta more in just a second here, but really helping the values of those puts to increase. So with this though, we had done in this class and in my swing trade class where I do some short puts as well, over similar type flaggish type patterns, right? This is what we do in the swing trade class. We look at inverted head and shoulders head and shoulders patterns, shoulder on the bullish side. Conversely, head and shoulders pattern to the downside, we look at those as well. We look at kind of these bull flag type patterns with the expectation of prices going up. We look at cup and handles, just to name a few. But with those, there were a couple that we had put in that I wanted to address with you and talk about the concept of rolling into the next month and why, if you stop and think about it, if we knew a company and if we've gone through and done enough details and enough analysis, let's just say with whatever company it is, in this case, it's going to be Delta. So here is Delta Airlines. Now, what I talked about in this class, I'd actually talked about it in the markets and sectors class as well, and the swing trade class, I should say, was DJT, the Dow Jones Transport Average with the dollar sign in front. It had been showing some strength, right? It kind of anticipated that, maybe a lot of what we've seen in the price of oil may have been at least to a degree with a lot of companies, they've found ways to acquire that oil, particularly maybe some of the U.S. companies with U.S. oil, even other oil down from South America, whatever the case might be. But it's like kind of where they're acquiring it at, are they needing it from the Middle East or not? So some of these companies have done a little bit better as of late. This is one we did on Delta, and let me highlight it right now and show you exactly what we had in here. We did have a short put. We had it for, and you'll notice now we've got roughly, there it is, 10 days left, or basically 2 weeks. 2 weeks remaining on this. Now, if you come over here and look, where are we at? We could say, well, you know what? We could wait 2 weeks to collect, basically, what do we have here? The mid price or the mark here, about 8 cents or so, 8, 9 cents. We could wait. Is that a lot to gain over 2 weeks? And how does that compare if we go out one more month, even using a similar strike price? Sorry, I'm pointing to the 66. My bad. Well, they're the same price though, right there. This is the one we're after, the 65. I had a lot of open interest on it when we put this trade on as well. We actually did okay on this. This was a short put. Let's go through the details of it real quick so I can show you how we might consider rolling it. We'll go through quite a few steps here. So that's up 147, $147. Now, if we were to close it at the mark, that's what that's reflecting. Okay, so it's 148 if we close it at the mark price or in that range, about 148, 147.50, right in there. Okay, now if you close it for 5 cents or less, there is no commission, but maybe commission doesn't, maybe isn't a huge thing to you. So just a consideration there. And by the way, just looking back over here, yes, Darlene did get it, the Harami. Yep. Oh, and Barb's talking about Haramis quite a bit. Yes. You know what? You can look for confirmation on those. Just going back real quick, Eric, and just as in, yeah, with anything, you can look for a little bit, you can try to find confirmation. Sometimes you can do it just, the very next day as well. I mean, that would be one thing that traders look for. And, when I say confirmation, I'm saying an expectation of a continuation of the run. Okay. Anyways, good questions coming through. Didn't want to miss those. Okay. And comments. So as we look at this, though, we say we've made this, but we stand to gain. We have one contract, roughly $8 over 2 weeks. Could we, all else equal, do better just by going in? I'm going to open up both of these. In fact, let's shrink this way down. Can 50 do it? Yes. Ooh, just barely. 50 strikes. Let's go over here and we're going to scoot on down and we're going to open up. It's already opened up. Our July down here. And let's look at the July. Here's our 65. We do have some a little bit higher. In fact, when we sold this, we had a much higher delta than we've got right now. This is a long ways down. And normally we're shooting for, on the low end, maybe a 20 delta. And again, real quick on the delta, a delta just represents right here an expectation that a trader might have. Like this might have an expectation of a 3% expectation of going down to 65 in the next 10 days. Very, very low. Some traders will shoot for an expectation in the 20 to maybe 15 range or something. I mean, on the low end, 20 to 40. And what controls the delta can impact the price, the bid and the ask price of the option based upon a $1 increase in the stock. That's what's going on behind the scenes, just as a quick note. Okay. If we look at this, though, let's take a look and see. We did this on, I'll show you where we did this. Yeah, so it was on 5/18, so not really too long ago, less than a month ago. 5/18 was right here. And what was this? Do you notice any sort? I'll just stop the drawing right at that point. So prices were going up. We kind of come up here and we kind of rested at a higher low. And you may in fact recognize a little bit of that flag pattern. Now we sold roughly, I'll just say this, 5 points lower. It was like a -5 points, right? Down to, we did the 65. We sold the 65 put right there at that point. So I'll just erase all this. When the price was here, kind of like a flag, and it did dip a little bit further, there's no doubt about it. But we said right there, we'll sell that put. And what did it do? It shot up. Now, I would even argue, and I think a lot of technicians might do the same, is that we're holding up better here thus far, currently. Notice this pullback in the flag is very, very mild. I mean, it's just, by the way, the last 3, 4 days, it's almost just flat holding the same level. And that's despite the crazy move that we saw Friday. That can give us some insight that maybe, Delta, which is true with a lot of companies, healthcare, some of the transports can be interesting too. They can march to the tune of their own drum, even if the S&P were to fall. But notice over here, we've got some support here at 75. Clearly, that's longer term. Yeah, you'd have to say there's longer term levels that were hit. You could say here too that is shorter term couple of potential, the historical for sure, but support points, little s, big S, long term, short term, right there. Okay, so what if we did something similar? If we sold 5 points lower and got a similar sort of uh, range, a strike price that we had before, between 75 and 70. There's also 70 that's down here further. So we've moved up our put, because our put for May-ish, or well, we sold it in May. was at 65, and now prices have jumped up substantially. So we have in fact shifted our strike prices higher for a potential roll, trying to collect more than just $8 over the next 10 trading days. Everybody good with me so far? Let's take a look right here. So let's go ahead and take a look at um, 70 to a little bit under set. There's 72, oh, excuse me. There is, I'm sorry, just below 75. So we have something right in the middle. We have a 75 clearly, and we've got a 72.50. Okay. So notice over here, what do we have now? Well, we've got 39 days left to expiration for one, and we're up from our 10. That fits more into our range. With that, we have more extrinsic value, more time value. If we're looking at those strikes under the delta, just by comparison, contrast here, there's your 19. So that's like a 20, and there's your 14. So what was I saying before? 20 to 15 might be on the low side, especially with the volatility we've had in the market. The VIX has been up, and that's kind of influenced the implied volatility, which all else equal, based upon the Vega, can influence the price going higher, and all else equal for option sellers, folks, that can be construed as a positive. Now that's all else equal, right? It just can lift. There are obviously other considerations to look at, but all else equal, that can help raise the premiums. And we might have elevated premiums here given the implied volatility levels and the VIX being up. So with that, let's look at these. So I'll let you guys kind of decide what paper trade you might be looking at, but that's below. We got either of these two. And what I wanted to compare, because we set over here with well, I'll just scan now. This is a fun way to do it too. Just scroll up. What did we have in terms of, well, we know, it's like a 2 cent theta over here, but really you're just collecting about $8 here. That's what's left. Of course, you're not going to get 2 cents the whole time. There's not that much left in terms of time decay. But let's go ahead and take a look at the theta over here by comparison and look at 10 days of theta and just see where we're at relative to that $8 range. Okay, so our theta over here is higher. The 72.50, just below the 75 right there. Our theta is at 5 cents. What can we get on that over this same time frame if we're considering that roll? 5 cents, folks. 0.05 or $5, right, a day. And that's 7 days a week. So remember, that's Saturday and Sunday. Do we want to include that in here? Absolutely. We're not just looking at 10 days over here. We're looking at, well, how many days in total for that, full option over that time frame? Because we're looking at the weekend too. We have to look at this. We know there's only $8 left in this one, but remember that theta is daily. That's Saturday and Sunday. That's one of the nice benefits of selling. Well, oh, my calendar's on my other screen. Uh, it's not quite because we don't have Sunday, right? The week starts off with Sunday. So we've got yeah, 6 days. So we've got, well, you got the weekend too. So you got 5, 6, 7. So you get 12. Okay, so 12. So not a full 14 because Sunday's gone and then also the prior Sunday. So anyways, to Friday or Saturday, I should say. So you're looking at 12. There's like 12 days of theta within there. That's 60 cents. Now, is 60 cents greater than 0.08 cents? Answer to that is yes, it is. We can do better going out further in time. There are some considerations. We're using a higher delta. We know that. But all else equal, if we were fine with what we've got and we like the ranges on where prices are right now, well, maybe that's sufficient. One other thing I wanted to note here too is there is an earnings event. Now that needs to be noted because earnings are very, very important. You got to be mindful of earnings. Now, are we comfortably above that level by earnings? That's the question mark. How do you feel about it? Okay. Do you feel like going lower? Some considerations there. I'm going to go ahead and just do the 72.50. One of the things we talk about in the swing trade class a lot is this. look at the price pattern you've got, and you can kind of estimate a general time frame. If we were to run in that flag pattern like we did here anytime soon, I'm just giving it several more days, we might be something very similar to this. In other words, we might be able to, in a couple of different ways to look at it with time, we may be able to still reach our target ahead of time. And if we do, we could always try to buy back the short put, buy it back earlier, and try to capture a gain in there. Okay. That's if that does unfold, but you have to be comfortable with that. For sure. Now, one of the things I just wanted to note, because it is over earnings, and this is a cool tool. I don't know if you guys have used this, but just go to the Analyze tab, go right over here under earnings. And this is great because it does tell you for the past 2 years or 8 quarters what Delta did around earnings. Now, going all the way back to 2024, you can see over here, we actually did gap down. That's the second quarter of 2024. That's a little ways ago. How about this quarter? We were actually up. We were up, 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 sideways, and kind of down. And that could still work out. And the last quarter, we were up. So there have been, if you're just like looking at a projection of, let's just say, earnings and where earnings have been, the one thing I have to say is that we have been up. What has implied volatility done post earnings if somebody was to hold through earnings? There you go, which is what implied volatility normally does. Post earnings, it really drops, and that can really kill the value of a short put. And if it kills the value of a short put, excuse me, of a put, is that good if we're short? The answer to that would be if we're short that put and the value of the put really drops dramatically, all else equal, that is, all else equal. Every one of these dipped, right? Pretty substantially here. That is a positive for the put because remember, the Vega for a 1% change in the implied volatility up or down. And if that goes down, it would subtract the Vega from the option price. So there are a few things that, earnings can help with too, but the whole idea is there an expectation of a big earnings drop? That's a consideration you need to look at. And you can use that historical way to look at it at earnings under the Analyze tab too to help us with that. But what we're going to do, folks, well, I've already got it planned. I spent a lot of time going through this one. I've got two more to go through that would fit with different characteristics to look at. But let's go ahead and do this. So first things first, I'm going to buy this guy back. Okay, let's buy it back. Well, okay, I'll just, you know what? I said 8 cents. I'll try to get 8. If not, we'll just see what happens. But there you go. Uh, who knows? It might fill, might not. I was saying 8 the whole time, so I brought up 8, but it could be 9, whatever. You're just looking at a dollar a penny. It's a standard equity options contract, so that would be a dollar. All right, let's go down now, and I'm going to take a look at that 72.50. Yeah, there is a lot of open interest still here too. I mean, this is good too. On that other one, absolutely. I got the impression that we might not have been the only ones selling puts there, perhaps. The 72.50 has the lowest, but these are all very, very tight. The volume on the stock, 2.2 million. Hey, that's seems pretty strong. And about a lot of times, if you're in the thousands here, 2,000 might not matter from 1,000 that much. In other words, there's just liquidity in the options, right? So I'm going to come over here. You can see the mid here is about 194. I'm going to shoot for maybe, I'll just say like a 194, whatever. 1.94 over here. So what does this look like? It's a little bit lower price stock. So the buying power effect isn't too bad. You can see. The one thing we need to note is that because the short put can be assigned at any time, although, traders will look for the price of the stock being above this level. Again, this is a bullish to neutral type trade. This assumes that max loss. It assumes that we did get assigned shares. Let's say it goes below 72.50 and then it drops all the way to zero. And that is delta going to zero, the stock. So in other words, bankruptcy. That's what this is accounting for. Would somebody try to get out before, a stock goes into bankruptcy? Probably, I mean, you know, that you'd think that you'd have the chance to as long as the market's open to sell those shares, but we just want to still highlight what that represents. So over here too, what do we get? We got that 194. So $194 is our credit. That positions us quite a bit better than just capturing $8 and then trying with the June month and then trying to sell uh, the July again, and try to, there's probably quite a bit we'll give up over here, quite possibly $60. So it'd be a lot lower. And that's what we'd be missing if we didn't roll. Okay, there's a lot being said there, but I thought I would just try to say a lot of it so you guys can kind of get a sense of what to maybe look at here. So yeah, what are your thoughts on that? It's just a roll here. Probability of expiring. Yeah, ranges from six. Okay, appreciate that, Mark. Yeah, there are some other ways to look at it too. You can look at the cones, things like that. Yeah, Mark's over here taking a look at the cone, and that would be let's see, analyze, and then probability analysis in terms of the cone. Yeah. We'll save that for another class, but I do appreciate that because there are a lot of great tools over here. I've got a couple more to get to. So let's dive on into those right away. I wanted to do this one. So here's another one we did. This is eBay, and it might be kind of similar. By the way, we did eBay. We traded eBay a few times in the swing trade class over here, here to here. And up here, we actually had, this is a pattern within a pattern. There was another flag that we traded with. There's a flag within a flag. And then, we kind of got this set up. This is sort of interesting too. A lot of times you get these really fascinating sort of patterns. This was not a great looking cup and handle, but it was kind of cup and handle-ish. And actually it extended to the cup and handle target up top as well. Kind of interesting. All right. Well, before I dive into this, folks, if you're getting value out of this, smash that like button. Be sure to follow us on our channel, which is right over here, our Trader Talks channel. And you're seeing that right. We are at 199,000 subscribers. Love to get it to 200,000 and love to have each of you on board. If you're not already on board, you can get these great playlists over here that we've got a number of different instructors. Barb's got, a lot of great stuff. That's technical analysis concepts. There's that swing trading class I just mentioned there. And also, Barb's got Trader Talks too. Excuse me, I'm sorry. She's got trading a smaller account. I'm thinking smaller account as I'm reading Trader Talks. But I'd mentioned a couple of these as well over here on the swing trading. I'll put this link in. There's a number of different classes we've taught about this and the different, really, in many ways, it's a price pattern type class. Let me just throw that into the chat. So you have it, and here it is, if interested. But a lot of great stuff for the coaches here. This will keep you up to speed on some of the patterns we've been looking at in the current market. Also, give us a follow on X. Had a couple of images over the weekend. That's sunset over the Great Salt Lake. And by the way, this is very, very, very close to Barb's house. It's just kind of above Barb's house. Barb's a little bit further south of this, but very close. That's the most water I've seen on the Great Salt Lake since the late 70s, early 80s for sure. But anyhow, that's not really financial, is it? Those are my weekend posts, but you've got other stuff in here you can take a look at it as well. Did one on the dividend aristocrats too. A little video. Okay. But remember, follow Barb on X as well. Barb Armstrong CS if you're not already there. I'm just Mike Fairborn CS. Barb's already thrown that in the chat, but be mindful of it. All right, so here we go. Let's go back to our trade here and let's just see what we had on eBay. eBay over here. Well, we were at, okay, so this is an interesting one. We still have some left, and this is where there's going to be a consideration that could come. There could be an additional consideration. We have 40 cents remaining. Now, we're comparing a higher number than we had before. There's no doubt. 40 cents is more than $40 more than $8. Um, when did we sell this one? We sold it, we're up $296 on it. So we sold it at 310. It's a more expensive stock. And this did have, a higher buying power effect for sure. Look over here, 5.5. What did we have on 5.5? This is always fun because you can go back and say, well, What did it look like when I was selling it? And is that something I could consider doing again in the future because there were good results? But if you look at it, that is 5.5. What did we see there on 5.5? What are you guys seeing? Do you like anything about this? This was past our swing trades, by the way. We elected to go with a short put on this one. I wasn't teaching this class at this time. So we did a swing trade on this one. It was really though we were using short puts. These were stocks over here, stock, stock, and stock. Different. Look at this. This had just barely broken. You see the breakout? New highs. What does that tell us? Trend is up. Higher highs. Where was the stock resting at? Prior highs. And did it hold there? It did. Now, we sold it kind of this big round number right there at 100. And so I'd have to say there was a little bit more risk in here. We don't have to take that much risk if we don't want to. This one was a little bit more risky, and it worked out. The trend, in other words, this extended trend continued up. Now, you could also argue that this bull flag right here is a pretty extended flag. And with this extended flag, sometimes we've seen this over here, they can go on for a while. And remember, that can work in our favor just as good as the price going up because it's bullish to neutral. If we sell at 100, again, we're higher, slightly higher than where we were. But I will say this, we now have maybe some stronger support at 105, possibly some short-term support at maybe the 109 level. So again, we've got a short-term and a longer-term level of possible support, historical support, no doubt. Could we sell at the 100 or maybe even a little bit lower because volatility is creeping up in the market? Well, yeah, what about below 100? What does the between the 100 and the 95 look like? And what does 95 look like if somebody didn't want to sell at 100? Let's just compare and see what we can make, relatively speaking, as we're considering another roll. Well, we saw over here real close to 40 cents on the 100 here. If I close this one and let's go out the next month right here for the roll. And again, a roll just simply means, in this case, buying back one and selling the next one out. In this case, it's a month out. We're just rolling a month out at different strike prices, though. We're also considering the trend, and so we're in different deltas as well. Okay. So what do we have behind there? Well, we've got this. We've got the 97.50 right here, and we got the 95. I should just we'll just wrap around both of those. What are our deltas? Wow, the deltas are going to be a lot, 16. So real close to that bottom end, the 15. And I've adjusted this lower just due to the higher volatility in the market right now. So we're letting it kind of advance as opposed to 20. We did go even below where I've been talking about this in my classes, just to give it a little bit more space. But that's really, close to 15. You got a 16 and a 12 over there. So I want to do this one this way. I'm going to send out just a quick poll, and I'm going to talk about one other thing. If we can get at least uh, 30 responses, that would be excellent. But which one would you consider here? The 97.50 or the 95? I know they're close, um, but I'm just curious. I'm actually going to let me just add a third one here. We're going to say 97, let's see, 100, and whatever one we get in the next couple of minutes, I'll use it. 197.5, excuse me, yeah, and the 95. Considering more volatility in the market, right? Okay, which put to sell on eBay? There we go. Let's start that poll right now. Okay, poll has been started. What are you guys thinking, given everything? I'll show you the VIX real quick so you can see it, just as a consideration. But there is the VIX. And I was saying this in the markets sectors class on Friday. Sometimes you get these big spikes. Take a look at this over here. You see the spikes over here? Look at this. So when you get a big spike, a lot of times you come back down. Spike, down. Now, this one did come down a little bit over here too. Spike, down, spike, down, spike, down. And then we really blew off the top over here. But you guys can kind of get a consideration of that right there. where we are, but it's still, we're higher, right? Quite a bit higher. So let's go back to that eBay. And I think that's been 30 seconds. So let's go ahead and take a look. Oh, let's see. We're right stuck at 50. Does anybody else want to vote and move us? Oh, where are we? There we go. Don't want to end the poll. All right. So here we go. Let's click on it. It might be pretty close. I voted for 100. Okay, Sam did. Let's go ahead and hit it. We'll close that poll. End it. Oh, okay. It looks like that 97 might be wrong, but what's cool about this is you guys have different considerations for where it might be. We got pretty close with 24 votes. Appreciate you voting there. So there you have it. Actually, yeah, the 97.5, which is right in the middle, kind of puts us in a little bit of a sweet spot. It's kind of comparing, sort of a buffer zone, it has to fall a little bit further with also a premium. The premium's higher than 95. It's just kind of basically taking the middle ground there. So let's do it. I'm going to roll it anyways. I think some traders might even do this. Now, here is a consideration. What if we were comfortable, if we were totally comfortable, consider, and you thought that eBay might go flat for a little bit, could you not hold this for one more week? Now, keep in mind, our risk goes up keeping it. Our risk goes higher. And you could say, though, if I start to spike above a certain level, I'm going to close it. But you're getting some pretty good theta every day now. Look at that, $7 a day on that mid range. If you're able to close it at 40, think about what it's going to be tomorrow, just as a thought. Uh, if you didn't want to do, I mean, I'm just throwing out more ideas. It could be, let's just say it could be, more income potential you could get, but right now it's seven. So if you held that for just 3 days midweek, maybe $21, that cuts that 40 basically in half. And so now you're down to about 20 cents. Just a thought. Now, if it starts to break higher, the prices, in other words, prices dip lower, you've got to be aware of that. In my trading, I've done both. There's times where I say, I just don't think it's going to get hit. I'm willing to watch it for a couple of days just to let that one die off, but I want to get a new one in because I think there's some decent theta over here that could help out if I think I'm in a pattern that's going to hold up. So I'm going to go ahead and shoot for this middle, what is it, 118? That's the mark. We'll just shoot for this 118. And what we can do too, if, anytime you wanted to take, because I think some traders will do this too, if you didn't want to wait around for the whole thing, you can take that 118 times it by, let's say, a point 0.2, get 80% of this as well. So we could actually set our exit up at that level. I'm just going to put it in right now because we're talking about rolling, so you could consider rolling. This is kind of an alternative sort of to rolling. It doesn't have to be though. The two could come together, but if you're kind of watching it, I mean, in a sense, what are we doing over here? We're taking off, like, if we were to take it off, we're taking off a portion already because we've got 40 cents left out of that 310 $310, and that might be enough for somebody, to capture that. So just throwing out different concepts here, but let's go ahead and take a look. I'm just going to send this one through. So buying power effect, it is a more expensive stock. It's $1,000. There's your max loss. There's the credit. I'll send it through right now. And we'll see if we get a fill. I'm looking at the Junes, but we did the July. Okay, one more. Let's slip one in real quick. Here is another one that we had. Now, this is kind of like this is a SaaS, software as a service company. It's Now, and look over here with me on Now. Do you guys see anything? It's just stepping back and looking at Now. Looking at Now right now. What do we got? Okay. There you go. So there are a few things that, yeah, see, I love the considerations you guys are throwing in, what you're looking at in this scenario. Great. Let me just draw it because there's a little bit of a delay, but there might be something like this going on. Now, these are often, they can be. Some traders will look at them as being, uh, yes, I was waiting and S. Riley got it. Yes, there's a higher low too. Exactly, Zach. But yeah, I was looking for that pattern right there. You see it right there? Cup and handle. Zinc, you got it as well. Exactly, right there. Yes. Nice job, guys. Exactly. So there you go. There's a cup and handle. Software has really been pushed off a little bit. There was an interesting note on software. Microsoft had said that that they were paying Anthropic $500 million a year for AI, and they said we'd rather just keep our people. And so they stopped letting go of people. I think they brought some back. Don't quote me on that, but I was reading an article around that. And some of that you're starting to get with the software companies rounding. And by the way, the same as I'm talking about Microsoft, something similar happened right here, MSFT. Not exactly a cup and handle, but we saw some moves, and in other words, it stopped going down and started to go up, trend up. We don't know what'll happen here, but back to now, we did a trade on now at a little sort of a mini flag, but there you go. So could this be a longer term reversal? There's a quick look at our weekly chart. Oof, we've been down a long ways. You can actually even see the cup and handle even on a weekly. It just has to follow through, but we're seeing the markings of it. The end of a cup and handle, folks, is something we talk about a lot. Look at that. It ends with a flag pattern type setup. And the money flow was really good, accumulation of money, buyers relative to sellers, pretty strong. Let's take a look at what we have on now. We still had one over here. Where is now? Is it further down? Oh, it's way out of the money. Okay, so we've probably done okay on that. Yeah, it's down to 85. Wow. Okay, that's a long ways away. So you're saying down here at 85. Um, well, I mean, it doesn't look that far down when you see how far the stock's fallen. That's a little bit better looking at 6 months or so. Look down here. So it's 85. Let's kill this one. Let's do another roll just so we have it. There's now right there at 85, made 120. There's 15, basically 15 cents left. Okay. I'm going to go ahead and just close this one now. We did that on 519. 519 is right there. Do you see where we did it? The mini cup and handle, and it followed through. It's part of a longer term cup and handle, patterns within patterns. So I'm going to close this one. I'll just buy this back. Um, I'll just try to buy it back at 15. Always, check your dialog box, but that freed it up. I'm going to go over here now. It hasn't filled yet, but if I come back over here and look to do something else, oh, there's your 15 delta. There's a 95. You know what I'm going to do? I'm going to give us a little bit more breathing room. Take it down five more. Okay, some would say, Mike, that's a lot longer than you had here, but this guy can really move, and I'm putting it all the way down towards the bottom of this range where there could be also, take a look, there could also be support right there, historical support. So somebody might say, well, I'm okay actually owning it at 90. I'm just throwing that out there. Maybe they could be okay with that. Let's go over here and just put it on and we're done. So here is your 90 and we're just going to sell it right here. It looks like 125 what we can get out of this. So I'll raise it a dime. Oh, I don't know if we can, but we can certainly try. So we're going to choose 90. Again, that delta is at a 10 and the open interest, very good in the thousands. Excellent. We're almost at 14 million shares in terms of what we've got up top. That can help to also facilitate a tighter spread. Okay, buying power effect 900. We're a little ways down. So it's 900. There's your max loss. And there you go. All right, that one filled quick. We got it. All right. Well, everybody, that is what we had for today. I hope you found this useful and informative. Again, you can follow Barb and I on X, Barb Armstrong CS, Mike Fairboard CS. I look forward to future discussions with you. And you guys have a great rest of the day. We'll see if that bull trend stays strong, that Harami pattern follows through. But either case, we took a look at that neutral aspect today as well with selling the put. So bullish, the short put also neutral, and even some to the downside is what a lot of traders will anticipate holding above that short strike. So on that, good to see y'all, and we'll see you tomorrow in the swing trade class. Take care, all. Bye bye.